You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is Tuesday, December 4th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Tuesday. First thing to know is U.S. stock futures pointed to a lower open. U.S. stock futures pointed to a lower open as relief over a pause and escalation of the trade war between the U.S. and China gave way to doubt over whether the world's 2 largest economies will be able to resolve their differences. Second thing to know today is Treasury yields extend their drop. Market focus remains largely attuned to the recent moves in the bond market. U.S. Treasury yields continued lower with the benchmark 10-year note reaching an intraday low of 2.937%, the weakest since September 12th. It was last around 2.95%. Adding to market worries, an inversion in the short end of the U.S. yield curve raised the specter of a possible U.S. recession. The yield curve on U.S. government bonds with 3-year maturities stood at 2.822%, while the yield on U.S. bonds with 5-year maturities was 2.814%. The spread between the 2-year and 10-year was also at an 11-year low. Third thing to note today is the dollar is under pressure. The drop in U.S. bond yields dampened demand for the dollar, which fell to a more than 1-week low against a basket of major currencies. The U.S. dollar index was down 0.6% to 96.38, the lowest level since November 23rd. Fourth thing to note today is oil continues higher. In commodities, oil prices rallied for the second day in a row as growing expectations that major producers led by Saudi Arabia and Russia will agree to form some form of production cut at a key meeting of OPEC ministers later this week, and that boosted sentiment. The oil cartel meets in Vienna on Thursday. U.S. West Texas Intermediate crude futures rose by $1.50 or 2.8% to $54.46 a barrel, while international Brent crude futures rallied $1.75 or 2.9% to $63.45 a barrel. Both crude benchmarks climbed by around 4% on Monday. And the fifth thing to know today is German automakers visit the White House. Top executives from German automakers Volkswagen, Daimler, and BMW, previous targets of U.S. President Donald Trump's criticism, are set to visit the White House today and meet with Larry Kudlow, Trump's top economic advisor. Daimler said Chief Executive Dieter Zetsche will attend the meeting, while BMW said Chief Financial Officer Nicholas Peter will be in attendance. Volkswagen CEO Herbert Diess is also planning to attend. They're hoping to head off additional tariffs on German cars, following fresh threats from Trump to slap more tax on vehicles assembled in the European Union. Our second story today talks a little more about the yield curve. It's from investing.com. As Fed says on track, narrowing yield curve could complicate debate. Top U.S. Federal Reserve officials say a strong economy will likely keep their rate increase plans intact. But on Monday, a key signal began to waver that may intensify debate about whether conditions are as solid as they seem. The gap in interest rates between 2-year and 10-year Treasury securities narrowed to its smallest in more than a decade, dipping below the 0.15 percentage point. That gap, or spread, is regarded as a particularly important benchmark among some central bank officials for gauging recession risk and weighing investor doubt about the future. Investors typically demand higher yields to commit money for longer periods of time. When short-term yields move higher, it can imply doubts about the immediate future. An inversion of the yield curve has preceded past recessions. And that, ladies and gentlemen, is news you can use for today, Tuesday, December 4th, 2018, your Options News Rundown. I'm Dan Passarelli. Trade smart and have a nice day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.